Imagine a world where the economic system operates on principles of fairness, justice, and equity. A world where the financial system is not just about making profits, but also about ethical and moral considerations. Sounds intriguing? Welcome to the world of Sharia Monetary Economics. Sharia Monetary Economics is a system based on the principles of Islamic law, also known as Sharia law. It introduces a unique perspective on economics, emphasizing moral and ethical values, in contrast to the conventional economic system that focuses mainly on wealth accumulation. Diving into the heart of this subject, the principle that stands out the most is the prohibition of Riba, or interest. This principle fundamentally alters the structure of the banking system. Instead of earning money on the interest charged on loans, banks in a Sharia economic system make their profits through profit and loss sharing agreements. This kind of agreement emphasizes mutual consent, shared risk and fairness, fostering a sense of community and cooperation. Another key principle is the prohibition of Gharar, or uncertainty. This principle aims to eliminate ambiguity in economic transactions. It advocates for full disclosure and transparency, ensuring that all parties involved in a transaction understand the terms and conditions. The third pillar of Sharia monetary economics is the principle of Halal, which means permissible. This principle promotes ethical investments. Investments should not harm society or the environment. They should be beneficial and contribute to the welfare of the community. The principle of Zakat, or almsgiving, is also integral to this system. It is a form of wealth redistribution, where individuals with surplus wealth are encouraged to donate a portion of it to those less fortunate. This principle nurtures social responsibility and narrows the wealth gap. Lastly, the principle of Takaful, or mutual guarantee, encourages a sense of solidarity. It is a form of insurance where risks are shared among community members. It promotes mutual assistance and protection against unforeseen circumstances. In summary, Sharia monetary economics is not just about numbers and profits. It is a holistic approach that integrates moral, ethical, and social considerations into the economic system. It challenges the conventional economic system by emphasizing fairness, transparency, and social responsibility. In a world where economic disparities and financial crises are rampant, perhaps it's time to reflect upon alternative economic systems like Sharia monetary economics, which offer a unique blend of economic efficiency and social justice. While the application of these principles varies across countries and institutions, the core values remain the same: fairness, justice, and equity. So the next time you think about economics, remember, it's not just about numbers and graphs. It's about people, communities, and the values we uphold. It's about creating a system that benefits everyone, not just the select few. It's about redefining what we mean by wealth and success. That, dear listener, is the essence of Sharia monetary economics.